I realized actually when I was preparing this lesson that I probably prepared two that weren't as closely related. I mean, they are closely related, but in terms of like confusing and that sort of a thing. What I did is instead of doing the wedges and the patterns, I'm just going to do the wedges. And then for my next training, I'm going to do the flags and the pennants as opposed to the wedges and the pennants, because the flags and the pennants are a lot closely related, and you can kind of segue into both of them a little bit easier, but it's harder to segue from the wedges to the pennants without adding the flags also. So I'm going to group those together for my next training, and I'm just going to cover the wedges on this one. I had to call it an audible on myself on that one, just so I don't confuse a whole bunch of people, and just makes it easier to learn. That being said, if you guys have questions, just raise your hand, stop me, and then I'll come back periodically in between each one, and I'll try to answer them, and then give you guys some examples of what we're talking about. But I'm going to be talking about the wedge patterns tonight. For those of you who don't know, just quick house cleaning stuff. I get DMs a lot about fake accounts, all that stuff. I only have one account on social media, as does Chris and Crystal, all of the other providers. Make sure that you go and follow the Wealth Squad, and then follow the providers that are on the Wealth Squad's accounts. That's the easiest way to know whether or not we're fake. They're not going to follow any fake accounts. So anybody else that's following you, that's not on the Wealth Squad's page, then it's fake. All right, so talking about the wedge patterns, it's hard to understand what they are without knowing what it is. And so the wedge patterns themselves, it represents a tightening of the price movement between the support and the resistance lines, which can either be two things. There are some advanced patterns, but I'm going to talk specifically about these, and then I'll get into another one at the end. But those two wedges are the rising wedge or the falling wedge. The rising wedge is also known as an ascending wedge, and the falling wedge is also known as a descending wedge. So that name gets tossed around a little bit between the two, but just know that they're pretty much the same thing as they're being referenced. So with the wedge patterns, as opposed to the previously discussed triangle patterns that I was talking about in my previous lessons, the wedge patterns, they don't have a horizontal trend line that the triangle patterns do. It's just sort of neutral in a sense, and symmetrical, and it's represented by either two upward trending lines or two downward trending lines. That's it. And the wedges, they can present themselves as both a continuation and a reversal chart pattern. So they're a little bit trickier to know, but what that means is the price action may break out to the upside or break down to the downside from the wedge pattern, but it continues in the overall trend direction of the stock in whichever direction that's going. So one thing to know with the wedge patterns on the time frames is that when you're looking at the intraday time frames, the day chart, the 15-minute, the 30, 5, whatever, right? So those are always a less than a day to develop. So what does that mean, right? It means they're much more difficult to identify, and of the overall wedge pattern of the intradays, these are the weakest wedge patterns, right? But if you're looking at more the long-term patterns, these take within 3 to 6 months to develop. There's a lot of data involved, right? So these are going to be preceded by a strong trend, whether that's to the upside or to the downside, whatever those are coming into, right? However that's forming. And the long-term wedge patterns, the 3 to 6 month patterns or more, however many months that is, right? These are going to be your strongest wedge patterns. So talking about the rising wedge chart patterns, right? It's going to be, and we always talk about higher highs and higher lows. This is what we want, right? Well, it just depends on what you're talking about. In this scenario, your rising wedge patterns, these are bearish signals. These generally always break to the downside, right? If it's moving in the uptrend as it's moving here, this is the reversal to the downside. And if it's coming out of the downtrend and moving upward into that uptrend, then it's going to be a continuation. So the rising wedge is a bearish pattern, and it's the inverse pattern to the falling wedge. And the rising wedges in an uptrend shows that your momentum is slowing down, which signals a future drop in the price at some point, and it's usually as the wedge gets smaller, right? The rising wedges in the downtrend, coming out of the downtrend, right? This is the downtrend. It shows the price is moving higher, which causes the pullbacks against the downtrend, and the price movements lose momentum, which indicates that the prices may fall lower once it breaks below the wedge pattern support, which is this, right? So with that, just looking at this, right? This is the strong coming out of the downtrend, right? So this becomes the rising wedge. You've got your resistance line up here, the support line, your consolidation, and obviously the weakening of the prior trend, which is here. So this is going to occur when the price makes multiple swings to new highs while the price waves get smaller, right? The channel starts to get smaller and narrower. Both of those trend lines slope up with the narrowing channel uptrend, and the more the uptrend channel narrows, the closer it is to the bearish reversal. And also, one of the things to say about these is that, and this goes with the falling wedges too, is that the rising wedge patterns in general, can be hard and deceiving to spot at times, right? A lot of people mix them up for the triangle patterns or the pennants or the flags. So these aren't always the easiest to notice. So with your rising wedge, when you're looking at the entry points for this for trades, right? You're gonna enter the rising wedge reversal as the price trades outside of the lower trend line, right? So once it breaks this support line, this is where your entry points are going to be, right? Now, it's also important too that you look at it from the sense of like the retest, right? Usually any time that there's any sort of a breakout or a breakdown, it always knocks at this door 2 to 3 different times, right? So that's kind of similar to this breakout, that it'll break to the downside, then it'll retest that support resistance line, and then it'll really fall, right? So your stop, so your entry point is where it trades to the outside of that lower trend line, and you can guesstimate that cushion based on, you know, some of the things we've talked about in the past with the average true range, the daily price range, and that sort of stuff in terms of price action movement. You can guesstimate what those levels of support and resistance are, where you can map out your targets. But the thing with that is your profit targets, I say this all the time, is like, it doesn't matter what an analyst says, it doesn't matter what I say, it doesn't matter what really Chris says or anybody else. Like, price targets are always personal. Just because an analyst or myself says, okay, well, this my price target's at 20 bucks. Doesn't matter. Maybe your price target's at 12. It's everybody's different. So just always keep that in mind. Like, your price targets, your profit share, your profit targets, they're all personal decisions for yourself based on your own risk tolerance and based on your patience. But your stop loss, once you enter the trade, whether that's in options, whether that's in shares, your stop loss is going to be placed above the last highest swing with the wedge pattern, which is right up here, right? This would end up being where your stop loss is going to be. And then your profit target, as I was mentioning, it's going to be the distance that's equal to the max width of the wedge pattern from the entry point, right? So it's going to be up here is where your target would be. You're basically aiming for the highs, right? The highs or the lows, vice versa, whatever patterns that you're looking at. Those are going to be your profit targets. So whatever this distance is between the two here, you're going to measure that to the downside. And that's going to be where you set your profit target. And that's your minimal profit target, but you can obviously take profit whenever you want. But that's just a guide for you to know have a rough idea of where this trade could go, like what the possibilities are, right? Because we talk about this in previous trainings of filling the gaps, right? So this formation, this distance between these 2 points is a gap. It has to be filled, right? And it's going to have a symmetrical gap to fill to the upside or to the downside based on whatever it is that you're looking at. So keep that in mind when you're doing that. And unlike the triangle patterns, the trailing stop losses are important with the wedge patterns, because price action isn't as predictable with the wedge patterns as it is with the triangle patterns. So again, going back to the basics, it's hard to understand the wedges and the triangles if you don't understand support and resistance. So if this is confusing for you, I highly encourage you to go back and do some of our previous lessons and learn about support and resistance and what those trend lines mean, because they affect the strength of these breakouts or breakdowns and where you would end up taking profit, and also where you would end up setting your stop losses to get out of the trades. Does all of that make sense? Yeah, Marcus, I'm gonna go over some examples after I talk about them. I'll go into the screeners and I'll show some of the examples of the patterns of, you know, how you guys can look for them also as you're finding opportunities. Davin, I don't know why you can't see anything. I'm sharing my screen with everybody. Nobody else is saying that they can't see anything. So it might just be your setup. No, on the Aaron asked, would you do a call on the last example? No, because calls go to the upside when rising wedges are actually reversals to the downside, right? So don't let that fool you. Don't like the rising wedge is a call, right? That's just the direction that it's going. But if it's a wedge and this is narrowing, it's going to break to the downside. So you would actually do puts in this scenario for a rising wedge. Makes sense? All right, moving on to the next. So in this next one, we have the falling wedges, right? You see that, and vice versa to the rising wedges, you're looking for the lower highs and the lower lows, and these end up being the bullish signals. In the uptrend, as these are going from the uptrend to the falling wedge, this is going to be a continuation pattern. And if it's coming out of the downtrend, has the falling wedge, it's going to be a reversal trend to the upside. So the falling wedge is a bullish pattern, and it's the inverse to the rising wedge. And the falling wedges in the uptrend shows the price is lowering, causing the pullbacks against the uptrend, with the price movements getting smaller, right? And the falling wedges in a downtrend shows the downside momentum slowing, but it's potentially indicating a price rally if the price breaks out of the falling wedge pattern right here. It may or may not happen. There are times with both of these patterns where you know, it could reach the top of this resistance up here, but then it could also break to the downside. So that's why these are tricky. That's why you have to wait for confirmation. If you see these wedges, you can't get in early, because if you do, there's a chance you could be faked out or it's a false breakout. So you really want to wait for that confirmation on the wedges before you get into your trades. And I talked about those confirmations in previous lessons about understanding the different candlesticks. I think it was like 2 lessons before this one. So continuing with that, this is going to occur. The falling wedges are going to occur when the price makes multiple swings to the new swing lows right here and here. Well, actually, really right here, right? The lows are pretty much going to stay the same here, but the lows on the top side are going to be different, and the price waves get smaller, right? Both trend lines are sloping down with a narrow channel downward, and as the more the downward channel narrows, the closer it is to the bullish breakout reversal to the upside, right? And like I said before on the rising wedges, that the falling wedges can also be hard and deceiving to spot as well for the same reasons that I mentioned with the rising wedges. And your entry point is going to be vice versa to the rising wedge. It's going to be once your price trades outside of the upper resistance trend line right here, right? And your stop loss is going to be, it's going to be placed below the last swing within the wedge pattern, right? So your stop loss at some point, it might be somewhere within here, but in terms of when you want to get out of that trend is when you want to place it down here at that lowest swing. And your profit target, again, is going to be the distance equal to the max width right here, right? So then you're going to basically duplicate this and measure this up here of where your profit target would be, whatever that is. And again, you want to implement trailing stop losses with this based on support, resistance, and basic daily price action movement. Come back to questions. What time intervals? A minute to 15. Give me a second, y'all. Let me check on the audio. I think everybody's already muted, so I'm not sure what it is. Let me see. It might be also that I mean, I have my microphone connected, so I don't know if it's that also. Y'all are good now? Sorry about that. I don't know what the issue was with the crosstalk. Everybody should be muted though. I'm sorry, I lost my spot. Okay, so everybody good with the falling wedge and the rising wedge. So I'm not strat averse. I know about the strat and things like that. And I know one of the things that the strat uses a lot are the broadening formations. So these are also wedge patterns to understand too. And with the ascent, and again, it's the same thing. It's the ascending and descending broadening wedges, right? So the broadening pattern typically occurs in the uptrend, and it's usually a reversal pattern, but it can also occur in a downtrend as a continuation pattern, which is this, right? You see that the broadening formation keeps getting higher, and you see that this continues to get lower, right? That the support and resistance is inverted and from one another, right? So the two parallel lines, they're divergent of one another. They're going in opposite directions, right? That's what divergent means. It means it's going in opposite directions, and your highs are progressively higher while the lows keep getting lower, right? The highs keep getting higher. The lows are kind of staying the same. Highs are staying the same. The lowers are getting lower here, right? And your minimum price target is again, like I said, it's going to be the width of the wedge pattern projected from the breakout point in the direction of wherever the prices are moving, right? So it's going to be this distance here, and then whatever your minimum price target is, basically duplicating this width to the downside, and again, duplicating this width to the upside for your upside price target. The broadening formations keep kind of those same principles as the rising and falling wedges. It's just slightly different in those, right? You know, in terms of whichever one. I know with trading the strat, you've got the inside days, you've got the outside days, right? These wedge patterns are going to signal what those inside outside days are. You're going to be able to notice those when you notice these patterns. If you're, you know, if you trade the strat that Ray and Kia do. Grazi, I'm new to the group, just joined yesterday, wondering when these slides get shared at all. I'll share them after the presentation, and then this will get uploaded to Wealth Squad University in a couple of days, usually on the weekend. So in a nutshell, y'all, that's covering the rising wedge, the falling wedge, the ascending broadening wedge, and the descending broadening wedge, right? Same principles, they're all related. The ascending and the descending broadening wedges are more advanced, but it's good to know them. I didn't want to like go over too much of it, but it's very, very similar concepts. There's not a whole lot of differences between them when you're looking at them. And obviously, like the broadening formations are far more noticeable than the smaller wedges are. The broadening formations are like plain as day. All right, so I went over this in the last lessons that I did too. So you can't find, at least I don't look for them through this screener, but you can come to FinViz. This is the tool that I use. There's a bunch of other ones out there, but this is the one that I use for myself. You can come to this screener tab on FinViz, right? And you can click all at that page. I just did this to save time. And you can set the pattern to whatever it is you want to look for, right? In this beat down market, if you're looking for things to, if you're looking for opportunities to buy something, then you might be looking for rising wedges, right? Things that are going to get crushed or things that are going to break to the downside. Maybe you want to play puts, maybe you want to scoop up shares at some point, and you want to catch these opportunities, or you want to look at the falling wedges, right? So you can come to the pattern and you can choose between wedge up and wedge up strong. I usually do the wedge up strong. It's just going to be a stronger formation. It's going to single out a lot of other noise and nonsense. So you can switch that here to wedge up, or you can do wedge down. And I told you about the ascending triangles last time, and it's the same thing here. The wedge up and the wedge down is essentially the same to the channel up and the channel down, right? It's the same thing because the channel is narrowing, the channel is broadening. So you can look at all of these and see the similarities, right? So just to show that, we'll do the wedge up, and I just set the average volume at 300,000 because that's a good volume for things to start to move. And I usually look at this preliminary chart before I go to this bigger one. The bigger ones don't as blatantly show the formations, right? It's not going to show the formations unless you set it. So I usually come to the overview and look at the patterns first and see kind of what's shaking, what's cooking in the kitchen. Let's see, did I click it? I don't think I clicked it. So looking at these, and I set them at optionable just as a sense of killing two birds with one stone. I want to maybe scoop up shares. I want to be able to play it in options. So I'll make it optionable in my screeners, right? And you can just see a lot of things are getting beat down, but there's one that's sort of lasting the test of time, which is change. Now, looking at change, you can see it's not gonna show up here, right? But you can see that triangle. I'm gonna zoom in so you guys can see it a little bit closer. So you can see the descending wedge, right? The falling wedge there as it breaks out outside of that, and it's basically skyrocketed as soon as it broke out. It broke out a little bit, consolidated sideways, and now it's $3.50 more than what it was once it broke outside of that channel. Now there's that saying, right? All good things, things that go up, they got to come down at some point too, right? So if you take this, let's just come over here. G. So looking at this, basically the way that you're drawing these formations is you're taking the lowest point to the highest point, right? And you see that highest point is there at 27, right? From whatever point in time that is, you can see the similarities here, that this is taking it from the levels back in April, that that last run up, and it's a similar pattern, right? If you look at this pattern from back in, it's almost completely identical. I talked about this in understanding the candlesticks and looking for clues and patterns, right? You can look at that time frame on change from January all the way to April and look at the candles from like mid-May or the beginning of May all the way until September, and you can see that that's almost completely identical to that same pattern. So those are the things you look for when you're trying to understand the candlesticks and you're looking at these stock charts. Don't just look at the year chart. Zoom out and look at you know, a 2-year chart, 3-year chart of it, right? We can come over here. I'm just gonna go to stock charts because it's a cleaner look and it's a little bit easier to look at on multiple year time frame. So coming over here, looking at like the 3-year chart. We'll go maybe 2 years. 2 years is probably easier. So you can kind of, it's not as obvious. So this is one of the things of like using the different tools, right? You saw like looking through FinViz of how easy it was to sort of spot that duplication within the chart, that you could see the identical chart pattern, right? But then you come over to stock charts, it's a little bit harder to read, right? To break it up. It was easier to look at it there. And then you come over to trading view, it's not as obvious right off the bat. So this is why I use all of them together. Some of them, it's just easier to look at sometimes on different things. So these are just helpful tools for me of being able to pinpoint these different patterns, right? But looking over here, you see that it's basically almost identical to right in here, right? Where this sort of duplicates, comes over here to this time frame, and it's almost the same, right? Does that make sense? Rodney, do you think FinViz Elite is worth getting when you are first starting out? I mean, look, if you don't have the budget for it, you know, build up to it. But I think the more tools that you can have in your arsenal with real-time data and real-time information that give you leverage, I think it's absolutely worth it, because you can make that investment back in one trade, in one options trade, one really good shares trade. You can make it all back for yourself. So I think it's totally worth it, but it's just a matter of your own budget, of what you can afford or what you can't. So looking at some of these other ones that are in the wedge to the upside, right? So I can come down a little bit. Now this one really fell down well below that channel, right? So this was that the ascending wedge, right? Broke to the downside. You see that it really took that, yeah, what one was that? Yeah, GPK. I mean, that was like a really, really hard fall right there around the $22, $23 range for that September timeframe, right? So you can see the examples of where those breakouts are. And if you map out these support and resistance levels, you can see where the peaks are. If you just draw a horizontal line across where those pivot points are, right, where the momentum shifts from the upside to the downside, if you draw a horizontal line across from all of those, you can see where those hard falls happened as soon as it broke those lines, as soon as it broke those support trend lines, right? So let's look at the channel up, right? The channel up strong, so we can see the difference of some of these. Same parameters, just changing the pattern. Volume is still there. Right? And so the channel up, it's not in the same effect, but it almost becomes asymmetrical, and it becomes a parallel channel for itself. And so a lot of the times you really want to trade it within this channel of consolidation where you can end up really running things up. You know, Chris always plays the price channel from the bottom to the top or from the top to the bottom, right? You can make a lot of money by playing these huge gaps, right? And just waiting, like where this is at right now, you just want to wait. You want to wait for it to fall even further to that $4 mark, or wait for it to get back above that channel again. You know, and the same thing with Lily here, with this one, that this becomes this bearish reversal too. With I don't know, EQRX. So this just seems to just be consolidating. So here's the thing. I've talked about this before with wedge patterns and the triangles. So whenever you have something that's consolidating for this long, so this has been consolidating since February, yeah, like the beginning of February, around that $6 mark, or $5.75, $6 mark. So you see where it's at now, that it's starting to make that upward trend, and you see that horizontal line being drawn across, right, where all of that resistance is, where it basically hits that resistance and it bounces back to the downside, right? And that's stemming all the way back into 2021, like December, right? That long candlestick in December, basically where that starts. And then you go forward a little bit to like January, and you can see where it broke to the downside. It sort of consolidates for a second, and then it breaks hard to the downside again, right? Confirms that breakdown to the downside. But when you follow that all the way over to where we are now, you can see that price action movement, it resisted every single time. You know, you have multiple tops on that pattern, right? In that channel upswing. So this is what you call a symmetrical wedge, right? That it has, that it's basically the same shape, that it's perfectly parallel lines. So these are good to know too, is that it's approaching that upswing. Now the breakout's going to happen is if it breaks that 575, 550 mark, right? And it breaks above that. Makes sense? Aaron, is it easy to spot it on Thinkorswim charts? I don't use Thinkorswim. I've never used it, so I'm not really familiar with that platform. But they may have tools within there. They all have screeners, right? I know Kia uses a lot of screeners. Ray does too. So I'm sure that they have something that would be able to spot those trends. And I think Thinkorswim is like super strat focused. I think I'm not totally certain on that, but. Jerry, when can you watch the recording? You can watch it in a couple of days when it's uploaded to Wealth Squad University. So this is just some examples to the upside, right? So let's look at some to the downside, right? We'll go to wedge down. And when it's going to the wedge down, what happens? It's a breakout to the upside, potentially. That's the idea. Doesn't always happen. It's false breakouts, but there's possibilities. All the volume is set, so you see veil is obviously a lot of momentum there. Sometimes too, when I'm looking at patterns, I like to look at this change. I like to look at the change in percentage, and I'm kind of looking for that 3 to 5%, because around that 3 to 5% is when things really start to happen. That's when a lot of the breakouts happen. Usually if it's above that 3 to 5%, some of the times it's too late. Then you got to look at RSI, you got to look at all these other things. But I start to eyeball things when it gets around that 3 to 5% upside, downside, profit margins, right? As you can see, let's see, silver, right? Silver's kind of starting to go on a tear, right? So there's some that I would put on a watch list, like the market's getting totally beat up, but then you have silver pressed metals, which is metals and mining. So metals and mining, oil and gas are probably going to be doing well right now. Oil and gas kind of starting to do its thing. Gold is thriving. So I mean, this is one I would probably put on the watch list. You could probably catch this in both directions. Actually, you could probably catch this to the upside if it breaks that pattern, and you can probably catch it on the downswing as it goes back to $4, right? If it rejects it. Past patterns say that it's going to reject at the resistance. And if you look back in the April-May timeframe, like that was a hard downturn, almost sudden, as opposed to the June through July downturn where it was almost like gradual, right? So these are all little clues that you look for of like, okay, what can I anticipate? What am I going to anticipate? Come up with a hypothesis, come up with a theory based on the chart, right? Go back a year, go back 2 years, look at the trends and see what were the breakdowns like, what were the breakouts like, and see if you're right. Paper trade it, see if you're right. This is how I got good at measuring my own trades and like finding those banger trades. Is I started forming hypotheses on the patterns I was seeing, the clues I was unlocking. Like, you got to be able to do the same thing when you see these patterns, right? So coming back to this one, silver core. So even silver core, right? Like it has resistance at it's like $3. It's a 75-cent run up that this could potentially have. You know, trading options on this, you could do well. Even shares, if you're buying a bunch, your money could really move on some of these. And one of the things on this one in particular, to the upside, because that's what I love the most. I love when things go to the upside. I'm always looking for those really big gaps, like where this was before. Like even for instance, this one, right? It's at 309 now, but it used to be at $5. That's a pretty decent gap. Could it get there right away? It's hard to say, right? It was there in May. So chances are you've got May, you got June, July, August, September. You got 4 months in between that time. So my thought is it's going to take another 4 months at least for it to get back to that $5 mark. But something with this big of a gap, or, you know, from a previous high price target or from a previous resistance, which in this case, it looks like that strong resistance is going to be at 350, right? As the formation is sort of broadening, right? It's got that horizontal line, but it's almost going in separate directions. You know, that's still a pretty decent gap that can be filled. Wow, same thing with this one too, rock. This is a nice looking chart too. At least to the upside, right? From going to 31 and then, you know, breaking through that horizontal line down the middle. It's got a pretty nice little upside to 35. That's my thought process. That's how I'm saying things out loud to myself. That's how I'm analyzing it in my head as I'm looking at the charts. And once you understand the patterns and the price action movement on it, you can pinpoint your opportunities a lot faster, right? You can breeze through these charts. There's 95 opportunities here. I always say, like, I'm looking at 500 to 600 charts a day. Well, there's 95 right here. You don't have to spend 30 minutes on each one of these charts. You can literally go through and look at these patterns and in 3 seconds say, oh, this is something that catches my eye. This is something that I see. Like even for this one, FSM, it's touching that resistance point. I'm wondering if it's going to break out of that. If it breaks out of that, what happens? It's going to end up going further to the upside, right? So these are things that I'm putting on my radar. I'm just going to go down through some of these. I mean, even Steve Madden, it's at the bottom of that channel, right? Chris always plays the bottom of the price channel to the top of the price channel, and vice versa. Here you have Steve Madden at the bottom of the price channel. It's sitting on that basic support. Looks like it, you know, just looking at the zoomed out version, it looks like it's just above that, right? It has the potential of going up to that $30 mark and busting beyond that, right? I just want to see if there's any more good examples in here. Yeah, I'm not liking those. A lot of the charts that you look at are going to be trash. You know, you're not gonna find an opportunity in every chart, but it's important to really look at them. Michael, what platform am I displaying with? I'm using Finviz. You can just hover over, right? If you don't understand something, you can just hover over it and it'll tell you. It'll tell you what it is in the same way of like, if you want to see the chart on the company, just hover over it and it'll just give you a quick look, right? It'll just give you a quick outlook. Right, so back to this. Anyhow, y'all, that's essentially what we have for the broadening wedges, those broadening formations, right? If you look at SPY, right? Let's go look at SPY for a second. You can basically see is like as SPY is getting beat up, it's basically forming this whole like broadening formation too in the long run. You see. Let's see. I'm just going to look at the 5-year chart on SPY just for this sake. Right? So if you're drawing this out for yourself, right? You're drawing these trend lines. You're basically taking, right? You can almost take it from this point right here. You're drawing this trend line all the way down here, right? That it matches those. You're extending that out, right? In the same sense that it's not exactly, you probably have to go back further in terms of it to be broadening, but you can basically take it here that it becomes this, sorry, that didn't work, right? So it becomes this symmetrical wedge, right? So it's essentially just consolidating, right? Consolidating to the downside. It's not really gaining the upper highs, obviously, right? And the lows aren't really going anywhere in terms of where this was before. You can take it on the smaller time frames, right? But if you go back to 5 years and you draw this out, it's still just consolidating over this time, right? And it's consolidating to the downside. And what happens with the falling wedges? What happens? It goes to the upside at some point, right? So it's going to reach that point, and it's going to have its rally again at some point. You know, you just got to keep your eye on things and be patient. Yeah, what goes up must come down. Yeah, Archer, you said it too. Like when it hits the top of the consolidation channel to get out, yep. It's a good indication, right? With those wedge patterns too, of just it's the reversal pattern to the downside, and vice versa. When it hits that bottom of the channel, it's just in the same way that Chris plays those, you play them to the upside for those long run ups. And just to reiterate what Rodney says, like the patterns are fractal, just like Uncle Gerald says, right? The whole stock market itself is just fractal, right? Everything is for just like a limited time. It's all in portions, right? What happened 3 weeks ago, 4 weeks ago isn't necessarily what's going to happen, 2 or 3 weeks from now. Things could change too. So everything's just all fractal. It's all different in that way. But yeah, if you got questions and I didn't get to them or I didn't answer them in the training, you can tag me in any of the channels. I'm happy to answer them. Happy to answer them for you. I appreciate you guys tapping in. Let me know if you got. Let me know if you guys got questions on anything. I'll post the slides and everything in the chat later on. Michael says, what time frames do you mostly trust for drawing the trends on? For me, I spend a lot of my time on the day charts. The day charts are my bread and butter. I'm not on the intraday charts as much. Like if you're not day trading all the time, or you're just scalping. If you're scalping things, then yes, you need to be on the lower time frames. But day charts tell you the bigger picture of things. It's going to tell you what the overall sentiment is of things. So that's where I'm at on things. And I know I mess around a lot, and I tell you guys I look at all the 1 second chart. It's true, I do when I'm entering trades. But when I'm drawing trend lines and I'm looking for opportunities, I'm drawing things on the day chart first, and then I'm taking it to the lower time frames to see how that data meshes with the lower time frames, and how the lower time frame data meshes with the day charts on for the higher time frame. Rodney, I trade on I trade I view the charts in TradingView, but my platform for trading, I have all my investments in Charles Schwab. I trade on Robinhood, I trade on Webull, I trade wherever I have buying power. But all of my primary investments are in Charles Schwab. I'm not a fan of Schwab's trading platform necessarily. It's kind of old school, but I appreciate the company, the customer service, and their access to all of the stocks. I've never really had a problem with things getting halted. When things were halted, I was still able to buy all of these things. So I've never really had those issues with Schwab, and that's why I stick to the platform. But they're definitely old school in comparison to some of these other ones. Kayla, I haven't looked at ATVI, not lately actually. I kind of stopped looking at it when it got thrashed to the abyss, and when it went through all those allegations. Anyhow, y'all, I appreciate y'all. Drop your questions for me if you got them in the channels, and I'll see you in the Discord tomorrow. Appreciate you guys. You guys have a good night.